Hi guys, welcome to Investing with JYK. Today we'll talk about pigs. To be more specific, the hog cycle in China. So this is very similar to um, other cyclical uh, industries. Essentially, you get periods of underinvestment, and following that, you get a period of overinvestment, which would coincide with the price increase. And due to the lag that's inherent in this business, um, you almost can get somewhat of a cycle. You got a tick. So what do I mean by that? So let's first look at the pig price in China. Somebody very kindly, this Huatai uh, Securities, I've never ever actually heard of them, some kind of security firm that did an analysis. This is the only graph that I can find for pig price that goes back pretty far. I really would like to see things, going back to the 1990s, when the market is really gone to became a market, because prior to the 90s is all like price controlled, so it's kind of pointless. So this one, the yellow thing is pork. You can ignore the rest. The black line is Brent oil, crude oil, and the other one is general consumer price index. So you would see that the price of the scale for for pork on the right hand side, you can see this is quite large fluctuations, going from down 60% up 150%. So the pork cycle goes up to like 70% year over year increase in price. First cycle you can detect was up here in the 2007. So that actually coincides with the commodity cycle. I'm not entirely sure if the correlation is warranted, but it could be, because oil would drive up price for, I don't know, anything like fertilizer. Oil going up should drive up price for natural gas, which drives up the price for fertilizers, which drives up the price for feed, and that should also drive up the price for other things. But that aside, if we just isolate the pork price line, you can see that there's a big one going up 70% year over year, stayed there for approximately an entire year, and then it dropped like pretty bad. And it went, negative 30% year over year for a year, and then there's also decline. The actual decline lasted about, say, about another year, and then you got another cycle which goes up to another peak at 2011, and again that dropped, and then it was kind of flat for a while, and you got a cycle again in 2016. So by the mid of 2016, the price increase was the highest, but then the price started declining at 2017. So this is actually the second derivative, right? So this is the change. So if you make it an actual price, you would see something like like going up, down pretty fast, and then and by even here it's still going down, even though it's slowing down, and then by the time you reach this point, you would actually start going up. And this one's when it goes up really quickly, and then it goes slowly, quickly, and then again really quickly, and then you got the 2 years of drop once it reaches this point. So it kind of goes like that. like that. So it keeps going up, but because of inflation, obviously, overall. But you do see these cycles. So at this point, the decline, there's been already a year of decline, but that's not what we are interested in. So really, we have to think about what makes people want to breed pigs. It's not that pork price is increasing, it's that pork price is much higher than the cost of raising that pig. So if you look at the price now, so that's in April. So each kilo is about 11 yuan. So that's like $1.50-ish. So what that means is if your cost of production is higher than that, then you will get a price increase. So at the moment, it is. The cost typically is about 11 or 12 yuan per kilo. And then I got that from, there's a website, it's all in Chinese, but it's a website that talks about, it's targeted to pig farmers. And then they talk about, everybody's losing money, we have to hold on, and all that. So essentially, if you were to sustain pork production, you have to constantly buy new piglets and then raise these. So at some point, if your couple of things will happen. So if raising the piglets actually loses you money, then you basically don't buy. So the piglets takes, I think it was 5 months here. It says if you buy the piglets, which are 8 weeks old, so two months, it takes about 4 to 6, let's say 5, so 7 months total to be able to sell. 250 pounds in China's standard is about 110 kilos. Is very similar to 250 pounds, so it's very similar. I think that's mostly determined by when your the feed to meat ratio kind of drops, because during like humans, they grow in spurts. You got fast growth, and then you kind of flatten a bit, and then you got fast growth, and then you basically become adult and you no longer grow in size. So they kind of cut it off. You slaughter the pig as soon as it finished growing. So that's going to be very similar both in China and in the US. So it's about 7 months to grow a pig. So if you don't make any money, are you going to buy, if you're selling pigs at a loss, will you actually, at somewhere here, will you actually buy new piglets? Probably not. And the other thing is, once the demand of the piglets drop, right, think about where that comes from. That come from female pigs. These female pigs, you keep them alive even after adulthood, and then you basically keep making them having baby pigs. At some point, if there's no longer a demand for piglets, the logical thing is to do, at least in the short term, is to kill it's just to slaughter that female pig and to sell the meat, because otherwise you have to keep feeding them and they're not producing anything, and they eat quite a bit. So that will reduce the number of female pigs that can bear new piglets. So what happens then is your sexually mature female pigs go down in a downturn, and in order to produce the same amount of pig when the demand picks up, or when the price goes up and then the people are incentivized to produce, you can't just suddenly get new piglets. You actually have to increase the number of female pigs as well. So there's a lag. So the lag is going to be either two periods or 3 periods. So the 2 periods would be, imagine you already have some female pigs that are at 5 months old. You could either kill them and slaughter them and sell them for meat, or you keep them alive in order to bear more piglets. So say you keep them alive, that means you now need to get them pregnant and then raise the pigs, so that there's the piglets, right, in order to increase supply. So increase your meat production, essentially. So that is at least the gestation period and the time it takes to raise these new piglets. So the sexual okay, so imagine they're already at sexual maturity. That would mean the gestation period is 113 days or 114 days, whatever. And then you add that 7 months. So you're basically looking at 113 plus 7 times 30, 333 days. That means when the price signal comes from the market to the individual suppliers, it takes them at least 323 days to respond with new supply. Okay, so during that time, you essentially suddenly have a bunch more female pigs around, a lot more production. So it is possible that you get another oversupply at the peak of the cycle, because there'll be a bunch of female pigs producing piglets, and then a bunch of piglets that will grow to hogs that will be slaughtered a year later. Well, that probably explains why these price peaks typically is just about a year before the maximum decline in price. Same here, the peak and the maximum decline in price is about a year apart. Same goes in here. I mean, this one is slightly different in the sense that I don't know what really went on here, but you got actually a 2-year period. So that could mean, I'm not entirely sure, but that, because I don't actually raise pigs, but it is possible that the female pigs that's used for reproduction is not entirely the same. You don't grow them the same as the normal pigs, right? Maybe you have different feed and whatnot. Maybe you give them different medicine and whatnot. So it is possible that you have to wait another period, which is the sexual maturity of new female pigs. So basically, you would raise them specifically for reproduction, and that basically means you have to add another period to account for the growth to sexual maturity. So that says, I've checked a couple. There's basically said it's about 5-6 months. Let's say 5 months. So that you would add another 5 to 6 months to the period between the peak and the trough of the price change. Now, having said that, and knowing this one is from quite a while ago, but 2018, the price of pork is actually pretty low. gone down from, once it breached 12 yuan per kilo, people started losing money. So it went as low as 9. Not entirely sure if that's the bottom, but that could be the bottom. So what does that mean for investors? So there are two companies in China that grow pigs, that are big. Actually, keep track of them. At least one of them, this guy. And let's change it to weekly. And there's another one. So you can see that this guy had a big run up. I mean, you can ignore this. This is just the Chinese market getting drunk. But they had a big run up at the end of, well, mid of 2017. So if we go back here, it's kind of weird because that's when this is actually the peak of the price. Remember, this is the change, right? So by the time it inflects, that's actually the peak. Now, that would correspond to something like beginning of 2017. And then the price has been going down ever since. So it's kind of weird that this thing started going up at mid of 2017. But that's, if you think about it, that's when all the when profitability is highest, as the report shows, because the report is lagging by at least a couple months. So it had a huge run up, which I don't understand, at least on the books. I think something is fishy with this company's books. Like, it has, for example, I remember seeing 0 depreciation on inventory. So you got all these pigs, and then they cost a certain amount. How the hell do you not take a loss when the price go down, right? So if I have because you have to keep these pigs for a while. You have to keep them for at least 7 months, as we know that's when you can slaughter them. So for those 7 months, how do you not take any depreciation or write-downs? How do you not take write-downs, right? If I have imagine if I'm like an oil producer and I'm required to hold my oil for 7 months, and oil price has been going down, the logical thing is that your inventory has to be written down. So anyway, there's no write down. I think something was wrong with the books, but it peaked at beginning of this year. That's when the price was something down to like 15-ish, if I remember correctly. The peak was 20 and down to 15, and the cost is around 12. So now you can see it, that essentially halves your profit per kilo. So it's been going down ever since, but it's still very expensive if you subscribe to the Peter Lynch's method of valuing these things on PBs, because these are essentially very similar to resource companies. There's a lag, it's cyclical, and yeah. So this guy is also selling at 3 PB, but this one has had a really bad time. PE is around 17, but resource companies or cyclical companies, PE doesn't mean too much, right? And this one is also not just pigs; it's pigs plus chicken. So I would say it's likely that PE would turn negative for this year, because of the dropping price. And also this one has a pretty big debt. I think they have like 100 like 10 billion yuan in debt or something. And if you think about how much their equity is, this is market cap, this is PB, 3.79. So right, so 478 divided by 3.79. So you essentially have 120. This is 100 million. So it's 12 billion. Yes, 12 billion. I have to do the conversion. 12 billion yuan in equity, and then 10 billion yuan in debt. So about 50% leveraged. Now, what I'm waiting for at the moment is for this thing to keep dropping, because the earnings should turn negative. And once that turns negative, or if something, they run into some debt issue, maybe this thing will drop all the way down to single digits. And once they're in single digits, and that's when the PV is close to 1, I think it's a good opportunity to buy. But maybe it will never get there. You never know. But it's about keeping targets, right? You look around and see what potentially can happen. And that's, I think, how I deal with these cyclical industries. What potentially can happen, and if it does happen, then I should make quite a bit of money. I think that's... Oh yeah, one more thing. So why doesn't US suffer from this pig cycle? Because Chinese pig raising is still very distributed. You don't have a large... Well, they are forming these large corporations that raise pigs and have a bit of control over pricing. Is just appearing. They're forming. Most of the Chinese pigs are still raised by individuals, like individual farmers, and they probably have just 100 pigs or something or less, and they just manage it themselves. And so these people would not have they don't have deep pockets. They can't go out and borrow money to weather the downturn. So at some point they have to cut the loss. And essentially these are the people that basically lost out on the upside. So that is why in US it doesn't happen that much, because most of the animal raising is industrialized. In China it's not there yet, and that's why you got these big cycles. One other thing. So you would say, okay, so when the price is high, why don't Chinese import foreign meat, for example, from US? And that is true. There's some people do import it, and there's a company that's quite interesting that basically does slaughtering and meat products. They did import some from China. They actually from US. They actually bought Smithfield, which is one of the big pork producers in US. But import there's quite a bit of risk is associated. Very often, the Chinese government will say, "Oh, we're going to put a tariff." That's probably happening now. And the second thing is diseases. Whenever there's a disease, there will be a freeze on import from some countries. So US had some disease at some point, I don't remember, so that basically the import was stopped at that point. So another reason is a lack of futures market. There is no futures market for example, pork bellies, unlike here in the US. So it's all very primitive there at the moment. And this kind of inefficiency is how you get excess returns. So yeah, so I'm just waiting for these to crash, hopefully a lot, down to maybe 1 point something PB, and if it drops to less than 1 PB is even better, but we'll see. And yeah, so that's all for today, and I hope you find this useful, and see you next time.